Ladies and gentlemen, Netflix reports what you need to know. Our game plan in Forex. Did you overtrade today? No problem, because your problem has been solved. Our full stock analysis. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to Newsbeat Live and our Newsbeat Show. Not just Newsbeat Live. You guys in the room are Newsbeat Live. But welcome to our Newsbeat Show. Netflix reports. We got a gap up so far of about $16 and change. Was trading a little higher, as you could just see what happened in the after hours. They pulled it into 300 bucks, popped it up to 330, 313, and now we're just digesting it. Not really a big surprise here that Netflix beat. Like, we were talking about that the other day. Like, is anyone really surprised that Netflix beat? I think we were all pretty much as close to 100% sure of that as possible, but that doesn't insinuate why it gapped up. Why did it gap up then? If it wasn't just about that, it's about how much you beat by. It's not just by beating. There's a difference between somebody expecting a certain amount and then reporting a certain amount. When it comes to Q1 earnings per share, Netflix reported 64 cents. That actually is in line with the 64 cents consensus. Q1 revenue of 3.7 billion. They were expecting 3.69. Again, that is just barely above or just pretty much in line. Streaming net additions of 7.4 million customers. That's what really did it. And international streaming net additions of 5 million in Q2 is what the forecast is. So the forecast was raised. That's why Netflix is gapping up here tonight. So they're expecting Q2 earnings per shares of 79 cents. The consensus was 64 cents. Netflix is now targeting fiscal year operating margins of 10 to 11% and maybe even 12%. And they continue to anticipate content and marketing to be weighted towards the second half of 2018. They see their content continuing growth in 2018. And Netflix also says they're not looking to expand into news beyond documentaries. So, yeah, they're not looking, at least at the moment, to become a typical news station that you could find on TV. So, they also said mergers and acquisitions can be a useful tool in acquiring more intellectual property. And that's what really interested me. So they basically came out and said that mergers and acquisitions can be a useful tool in acquiring intellectual property. Let me translate that into English. Hey guys, we're looking to buy something. Hey guys, we're looking to take over publicly traded companies, most likely. So it leads and it begs the question, what can Netflix really do? First of all, they produce a ton of cash. I mean, Netflix, they're sitting on 2.8 billion in cash. Yeah, they have 6.5 billion in debt, but that's not a big deal because they just keep getting paid every single month. The P ratio on Netflix is obnoxious. So you have to remember one thing. What do I mean by obnoxious? It's a $246 P ratio. Yes, you heard me right. So for basically every dollar that Netflix earns for these shares, you're paying $246 for them. Sounds kind of beefy. Amazon has a better P ratio than Netflix at $234. Compare that to a cash cow like Apple, and you're paying $18 P ratio, much different than the other ones. So when it comes to the market here in a Netflix, if they aren't adding and growing in the way they described, they were going to get destroyed. Heavens forbid if this company actually came in with the expected user growth numbers. Heavens forbid you would see this stock decimated. So with a company like Netflix, they don't have a choice but to destroy the analyst estimates every single quarter. There's going to be a quarter you see, and mark my words now, it's not this quarter, obviously, we know the results, but there's going to be a quarter where I'll make up a number, where they're expecting 10 million users to grow, and they added 10.5 million users. And Wall Street is going to sell this thing off like it's nobody's business. That's what's going to happen. Now, granted, there's only a certain number of people in the world. So what is Netflix really banking on here? They said they're interested in mergers and acquisitions. Now, keep in mind, we've had some pretty phenomenal calls here. Like how we constantly said for 6 months before Whole Foods was taken out that Amazon should buy out Whole Food markets. That was a call here in the Newsbeat live room, and we've been doing it for 6 months. So let's talk. Doesn't mean I'm right in the future, but let's talk. What would Netflix need be able to do? First of all, if Netflix is smart, they take over broadband company. They take over cable. They're not going to be able to afford to take out a Verizon, but they have to take out a company or merge with a company like that because 100% of their business is dependent on internet access. Let's just call it what it is. 100% of their business is only internet access. And not only that, extreme usage of internet access, unlike Google. Extreme heavy amounts of data to stream a movie as opposed to doing a Google search or watching a quick YouTube video. The amount of data that streams is phenomenal. So what do they mean that they need merger and acquisition? People are already talking like, oh, well, maybe they want to buy out like a Roku. I'm like, are you crazy? Are you crazy? You think they want to buy out a Roku? You think that's what Netflix wants to do? No, because Netflix isn't run by a bunch of idiots like Snapchat. Netflix actually has an intelligent board that understands what they actually need to do, unlike the idiots at Snapchat, who basically have no idea what they're doing. So what if Netflix really does know what they're doing? I am already predicting that they're going to go into broadband. Why? Because they're not stupid. The only way they're going to grow how do you grow your user base? You give internet to everyone. You heard Tesla doing it, Elon Musk trying to send these satellites up in the sky that are going to be blasting Wi-Fi. That should be phenomenally good for the rates of diseases increasing in the world. You think we have a high percentage of disease now? Wait till everybody gets to feel the blessing of electromagnetic frequencies flowing and coursing through their veins. But if Netflix has half a brain here, what they're going to do is they're going to buy. We could come up with so many ideas here. You want to start with something that should be funny and obvious? How about Sprint? I know there was talk of T-Mobile trying to buy Sprint. They could do well with Sprint. Why? People have phones. Phones stream through cell towers. One of the easiest ways to get people hooked on the internet are people with cell phones. There are way more people with cell phones than televisions, believe it or not. There are way more cell phones in the world than TVs. Way more. It's crazy. You might have 1, 2, 3, 4 TVs in every house, but every single person in the house has a cell phone. Sometimes people have 2, 3 cell phones, right? That's the funny thing about cell phones. You have these poor countries, like even in Afghanistan, these people live in the mountains even. Those people who are, tending herds of goat and chicken, and they'll pull out their cell phone. Like people like that. You have it in the obviously maybe not North Korea. Maybe North Korea maybe they would have like limited access, but even North Koreans have access to cell phones, even though they don't have access to the World Wide Web. Everyone has access to a cell phone. And no, I'm not insinuating that North Koreans will ever be able to watch Netflix anytime soon. But everybody has a cell phone. So if they're smart, They should buy out Sprint yesterday. Sprint. I mean, Netflix is a $133.5 billion company as of the close today. It should be a little higher tomorrow. They have the cash. How much do you think Sprint is worth? What would you guess? Don't look it up. I looked it up. I'll tell you. Sprint is a $23.5 billion company. You know what that means? It means you go to Sprint and you offer them $9 or $10 a share, a 40% premium, a 50% premium, and letter S no longer exists. It's done. Not only that, you know what they start doing, Netflix? Buy a Sprint phone now and get a free month of Netflix. You know how many users they would add by pulling off some BS like that? You think it would cost? They would buy Sprint for free. They would get Sprint for free. If 10% of the people decided to stream Netflix on Sprint who didn't have it before, they would get it for free after. It would be like a 1-2 year investment, and they would have it for free with the monthly fees. It would be the biggest joke of an investment for Netflix to buy Sprint. Now, I don't know what Netflix is thinking when it comes to mergers and acquisitions and intellectual property. They don't need intellectual property. That's stupid talk. That's silly talk. What intellectual property do they need? They're streaming movies to you. What do they want to do? Get it like holographically? Maybe virtual reality movies? Maybe. And that you would need intellectual property for. I don't doubt that. And I think everyone in the future will have something like that. Fine. But right now, Netflix needs to keep its sales up, ladies and gentlemen. Netflix needs to destroy the street every single quarter. Otherwise, their company is going to be on a downward slope. So in order to do that, take over the broadband. International community. Oh my goodness, if they could break in China. Oh my goodness, if they could really break through India. Everybody in India has a cell phone. No matter, they still have a caste system in India, believe it or not. Remember learning about that in 2nd, 3rd, 4th, 5th, 6th, 7th grade? Remember that? The caste system? The people at the bottom of that pyramid have cell phones. You know what they don't have, those people? Netflix subscriptions. You want to really get Netflix to that next level? Take over the cell phone companies. Buy a Sprint. Buy a T-Mobile. You're not going to get it through with AT&T. Buy the whatever gives you access to cell phone towers. Buy creators and sellers of these cell phone towers. Set partnership agreements with other governments outside the U.S., which are much less competitive and much easier to do. Believe me, they would go in and thank you in India if you went up and you wanted to set up a bunch of cell phone towers. They'd be like, really? Yo, my man, come in, set them up all over here. You got it. Yeah, thank you. Appreciate that. What do you want in return? You want our population to be able to see movies on their cell phones? What? Okay, bring them in. It's not that complex. I know I make it sound easy, and it really is almost that easy, short of the loopholes and agreements that have to be made. So we'll see. It's going to be an interesting trade tomorrow. I'm not sure if I'm going to go ahead and straddle it. I went ahead and I did a straddle on CVS. And, all right, a movie studio? Sure. I mean, a movie studio would help them. But the truth is, people who are already working in those movie studios are already selling their content to Netflix. So, if, all the Netflix originals, people create the movies, they show them to Netflix, and Netflix is like, well, buy the rights to that movie. They don't need to shoot a movie. But look, it could cause some synergy. They could start hiring directors and give them jobs of creating TV shows and movies. I get it. That Santa Clara Diet show is pretty funny. Drew Barrymore and Timothy Oliphant from Justified. Pretty funny show. And we'll see. You know how big soccer is? Why isn't Netflix streaming international soccer? No, not the United States. I mean football outside the United States, soccer. Why not stream games? Why not, they have so many avenues to continue to increase. Management did a great job, so we'll see. Tomorrow, I mean, the all-time high in Netflix is 333.98. I don't know if it's going to break that tomorrow. I will be looking potentially bullishly tomorrow, though, in Netflix. Okay, just some of my thoughts. Game plan in Forex. All right, very simple. Two names that spiked through the ceiling today, if you didn't see them. First is Helios and Matheson, which makes Snapchat management look intelligent. Here's Helios and Matheson. I love that A plus trigger at 586. I can't stand the company as a whole because the management always, dilutes shares every time the stock goes higher. If you remember, this stock was $38 in October of last year. Now at, traded recently at $2.27. If you want to know why, diluting shares is bad for shareholders. But let's see if we could get a move through 430 tomorrow, today's high. Very simple. And the other one that's actually letter I, Intelsat. This stock has been absolutely amazing. Have you seen this stock recently? What if I told you there was a stock that went from $3.58 all the way to $8.55 in a matter of less than 2 weeks? You'd be like, hey, what name is that? That's Intelsat on just this magnificent rally here. I'm looking for a break of 855. That is the recent highs. When you look over here at the monthly, you could see the stock was much higher there back in 2013. It was a $26.80 stock, telecom service. Hey, maybe Netflix should buy this company. A lot of interest here. The monthly looks very bullish. Beautiful breakout. Let's see if we could break through the daily here tomorrow of 855. Oh, how many of you guys honestly overtraded today? I think I undertraded today and I was happy about it. But actually, how many of you guys actually overtraded the market? You were bored, you wanted a setup, you took it, maybe you made money, but maybe you lost money, but maybe you overtraded. First of all, if you did less than your average amount of trades today, I think you did a great job in today's environment. I mean, you look at the doji here in the Qs, which is basically a plus sign. It's that indecision candle. And when you actually look at the 5-minute today, the triple Qs, it was again a directionless market. We went lower, day lows, we went all the way up. Look, we're going to break day highs. Psych, nope, we're breaking day lows again. Look, we're going up, we're going to break day highs. Oh, nope, psych. No, we weren't psyching. We weren't kidding. Day highs. And then we pulled back all the way back to the middle of the range. It was a chop fest. And, of course, Mondays have been pretty choppy. And especially in the past, I would say 10 years. Not in general. Like, people are like, yeah, in general, Mondays suck. But honestly, like 15, 20 years ago, Mondays weren't bad. It's just like recently in the recent bull market. Pretty much, I would say the last 10 years of trading, Mondays have been give or take. But I have good news for you today, ladies and gentlemen, because I am going to teach you how to stop overtrading. And I'm just trying to bring value to you. And so many people have different commission structures on their accounts. And, again, I gather this information and I try to translate it in a way that everyone can understand. A lot of the studies, a lot of these things I get literally just off the internet, like a Google search. But I like to put my twist on it to really try to get you guys to that level. So, why in general do casinos provide winners and losers with complimentary goods or services? Why? Why when you go to a casino, they give you a little card, and depending on where you go, it tracks you, it knows how much money you're spending, and you'll get something for, quote unquote, free. Because when they do that, everybody's going to continue to gamble more than the average person that they don't do it for. Despite the fact that in a casino the odds favor the house, the losers, desperate to recoup their losses, will try to ride out their bad luck by playing it through. The winners, convinced they're in the midst of an unstoppable streak, will try to let it ride all the way to the top and invariably give much or all of their winnings back to the casino. It's a psychological ploy, if you will. Professional trading really isn't anything like gambling, but many traders have the mindset as if it was and trade excessively for the same reason as an ordinary gambler. Every active trader should really learn to trade instead of gamble. And we're going to take a look at some of the tendencies to try to prevent you from trading excessively and basically examine how this is potentially hurting you. So, as traders develop skills, each one travels virtually the same path, believe it or not. Initially, you're a discretionary trader. Then, as a technician, and ultimately as a strategist or a systematic trader, a trader is going to first analyze the market direction or trend, set targets for an anticipated move potentially. Correctly reading or predicting the market then becomes the highest priority. So the trader learns as many new indicators as possible, believing they're almost like traffic signals that let you know where to stop or where to go. This search for this magical combination of indicators really leads to the inevitable realization that multiple scenarios might exist, or as we like to call, the confluence of technical analysis. A trader's focus then moves to the probability of each outcome and ultimately looks at a risk-reward ratio. So, you know, looking at this, there's a lot of different mentalities in this market that really hurt traders, I feel. First of all, there's the type of trader, let's call him the quickly convinced trader. The trader who is quickly convinced. There's the trader who will see, just go through a bunch of names, something comes up on their filter, something comes up on their newswire, a headline, somebody's talking about it in the office. They see it literally run across the CNBC ticker. They hear it on CNBC or whatever station they're listening to, which they shouldn't probably be listening to anything, and they'll jump in a trade and take it. Like, for example, I think the perfect example of this is when you just start randomly trading names thinking that you have an edge. And every trader falls into this trap every so often, I feel. Every trader falls into it where they just look at a setup, they like it, and they just jump in because they think it's a good risk reward at that point, but they don't really understand the trade. And this is where news flow really ended up protecting me. If you want to know how my day looked like today, I made about $20 today trading. I kid you not. I literally made like $20 today. I made like $70 on Costco, and no, I hold on. Which one did I do? Which one? Oh no, I'm sorry. I lost $30 in Costco, and I made like $70 in McDonald's. I made like $40 minus commissions. I made like 20 something bucks, right? And I was looking at that, and I felt very happy with the way I traded today. Honestly, I was thrilled. It sounds crazy. I know. It sounds absolutely nuts to be up $20 and felt you were thrilled. Because at the end of the day, I came back to myself and I said, did I do what I was supposed to do today? And my answer ended up being yes, and I was happy. Even if I was down $1,000, I would have been happy with the way I traded today. Because as long as you could come in and do what you're supposed to do, you should never feel bad about it, because what you're supposed to do will eventually lead to many gains or big gains. The problem with most traders these days is they don't really have a clear-cut direction of what they're supposed to do. They think that they know what to do, so they'll start doing things that are absolutely insane, whether it's playing something going off their filter, trying to maybe trade the VIX or the Nugget or one of these triple hedged ETFs, and they'll start just loading into something because they see a little technical setup on it and they think they're going to make money in the long run doing that. And believe me, for every one trader that I see who's good at trading the VIX, I'll find you 100 others who aren't. So it's not about nobody can do it. It's about that most people can't do it, myself included. But with that being said, you really turn into that person where you're just throwing money at random trades, trying to either recoup, trying to make back losses, and as we just stated, that is obviously a terrible approach. And it's a shotgun trader, and they're craving the action, and traders often develop a shotgun blast approach, buying anything and everything that they think might be good. They might justify this by the fact that diversification lowers risk, that maybe there was a good technical setup, but obviously your logic, if you think this, is flawed. First, true diversity is spread over multiple asset classes. Secondly, multiple bad trades will never be better than just a few bad trades. If a trader has isolated a promising trade, concentrating capital on that trade makes the most sense. A telltale sign of a shotgun trader is multiple small positions open concurrently or multiple small positions in and out throughout the day, and it's what leads to churning when you're basically just buying and selling and making a little, losing a little, making a little, losing a little. Then you end up trading. And I used to churn all the time. I could trade. I remember there were days where I traded like 400,000 shares, and my P&L was like at the time when I had a higher commission rate, like on my screen it showed I was up like $2,600 in gross P&L, but at the end of the day I took home like $200. And I worked my butt off just to make that $200 with a $2,600 P&L, and it was disgusting. As a shotgun trader, you're going to struggle to provide a specific answer to the following question: why a particular trade was made at the time you did it. Ask yourself that. You're not going to be able to give a specific answer to the question that makes sense. You can give a stupid answer like you can to everything, like, why did you drive into the tree? Because, I saw a unicorn leading me into it. Whatever it was. A firm diagnosis can be made by reviewing your trade history and then asking why a particular trade was made at the time. The problem with shotgun traders, and if you're someone who overtraded today, I can guarantee you, and I've been at this job almost 20 years, ladies and gentlemen, and I can guarantee you are going to be the person who doesn't look over your trades at the end of the day, winners or losers. You just will move on, you'll shut it down, you'll go to sleep, whatever you'll do to relieve that stress, you'll yell at a loved one, you'll have alcohol, you'll smoke, you'll hopefully not do other things, whatever it is, and then you'll just move on to the next day. So be very careful about that. Another one is the market isn't always smooth sailing. So instead of large trending moves, it sometimes takes about in a choppy sideways direction like this market. Many traders will overtrade by assuming that minor market corrections are the beginning of the next trend. How many of you guys think that? Then you're buying at highs, selling at lows, buying at highs, selling at lows. Then they'll jump in and out as the expected trend forms and fails. Then they may even compound the situation by doubling into their positions. This can be obviously the most destructive form of overtrading, confident that the reversal is imminent, and the trader doubles the size or triples the size of a losing trade in the belief that he or she has averaged down to a better entry price and therefore will make a bigger profit on the move, or even more likely, you doubled or tripled down because you were mad, you were pissed off, and this effing stock that took your money from you owes you something, and that's why you did it. And that's why you did it. On the other hand, this obviously usually just increases your losses, but on the other hand, successful traders sometimes double winning trades, never losses, and are quite content to sit out the market, waiting for the right conditions in which they want to put money back. How many traders in the room were actually talking about in the past 2 weeks that they wanted to sit in cash? How many traders did you hear that from in the Newsbeat live room? Forget about even myself, which is obvious on the conviction of the trades, and you see me just staying in cash. But how many traders in the room basically want to stay in cash here? Look at this. What is that? What the heck is that? Compare that to this. Compare that to this. Compare that to this. That's a move. This is BS. This is garbage. This is chopping yourself to death. This is death by 1,000 paper cuts. Be careful. I have a lot more to show you guys about did you overtrade today, and if you really enjoyed that part of the video, just thumbs up, and I'll know to go over further segments and further ways in which you could prevent overtrading by identifying them first and actually showing you what is happening. If you don't like it, thumb me down. Thumb down the video, and then I'll be like, okay, you guys weren't so crazy about the did you overtrade section of our psychology part of the Newsbeat show. Nonetheless, ladies and gentlemen, we should have more excitement coming in this week with earnings like Netflix and Johnson & Johnson and other names in particular, in which we will go over. Now we go into our full stock analysis. Ladies and gentlemen, that is for members only of the Newsbeat Live Room. I hope you guys enjoyed the Newsbeat show. We are the fastest growing trading room in the nation. Happy trading, make money, and we'll see you guys next time on the Newsbeat show. Have a wonderful evening.